Good afternoon, everybody. My name is Patrick Hawe. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. No position updates from me, but plenty of trades throughout this week. Definitely been a busy week, slower day. Fine, this is probably the slowest day we had in the last 2 weeks, honestly, since this whole September, crazy volatility started last Tuesday, where we opened and just sold off all week. And can't say we've been getting bought up all week, but we're up decently this week so far. So just as a recap again, last week sold off pretty hard. You guys had Josh for the most part throughout this weekend. Obviously, Josh did a really good job. There wasn't a crazy amount to talk about Monday and Tuesday because we were waiting for CPI on Wednesday, and we were sort of just digesting. Hard to say really that's a bullish digestion because it's in a bearish pattern there, but kind of just digesting the sell that we got on Friday from last week. So Monday, Tuesday, a little bit slower this week, and then Wednesday, crazy day yesterday, absolutely crazy day. One of the biggest intraday reversals that I've seen in quite a while. Two, I was saying this I don't know, probably this morning. One of the craziest intraday reversals, daily, intraday moves that I've seen in a market that's not oversold or overbought. Because again, usually those wild reversals or just big moves tend to happen when you're in really extreme scenarios, and usually it's to the downside and you're extremely extended to the downside and VIX is through the roof. You get those huge moves, but it's usually not when you're kind of right in the middle here. So yeah, super impressive day yesterday where we had CPI come out. So we had PPI this morning. It was a little bit similar to CPI yesterday. CPI yesterday was pretty much all in line except for one number, which I believe was the core month-over-month number, was slightly hotter. But that just further prices in my opinion, a 25 cut for the market. And it seems like we're pretty much all priced in for that now. Fed next week, where market's pricing in 25 cut. Technically, the market's pricing in 26. But obviously that pretty much means 25. So 25 next week. And then I believe we're pricing in 100 by the end of the year. And I believe 50 that comes from the November meeting. So as of now, and it seemed like the market really wanted 50. And it seemed like that's why we were selling off last week, when we were kind of not getting that 50 pricing, even as we had some bad economic data come out last week. Seemed like the market wanted 50. Now we're not really getting that. So that seemed to be the worry coming into this week. And depending, again, how CPI looks, if CPI is not favorable for that 50, that could hit the market down. So coming into yesterday, we had CPI pretty much in line. It's not perfectly in line. One factor was slightly hot. And we ticked down and then reversed that. And it seemed like the market was just ignoring that. And that theory of a 25 cut and the market not liking that kind of being out the window. Fast forward, market opens yesterday. And that is maybe not out the window because the market sold off really hard off the open yesterday. Really, really hard. Did not, literally until the market bottomed, and hard to say this is where the market's bottoming yesterday. It ended up being that. But until the market bottomed at 11 a.m., that was the first time we touched the 5-minute on the ADMA, besides when we opened up, because we opened up after that CPI reaction, traded down through it, and then just absolutely got obliterated for an hour and a half or so. And then I'm sure there's a few reasons behind this rally. I'm sure part of that is due to 0 DTE options, stuff like that. But overall, I'm sure part of it too was, people not expecting it. So some people are shorting the bounce, and people are kind of thinking what I'm thinking with that 25-50 theory. But lo and behold, the market's always right. You're never right and the market's wrong. It's just you're right at the wrong time, which still means you're wrong in this game, right? Um, so market totally fully reverses that. 11 a.m. we bottom, kind of like bear flag, a little extended bottom bounce, and then just a perfect uptrend all day the rest of the day for over a 150 handle reversal. SPY went from 540 to 555. Super, super impressive. So it seems now, and it's an interesting setup going into the FOMC. And again, we had PPI this morning too. That really didn't move us much though. I guess just pull up the pre-market chart. PPI fairly, usually not as market moving as CPI, especially when CPI comes first. Fairly similar to CPI, meaning that most of it was in line. Two factors were a little bit hotter. I think it was both the month over month factors, PPI month over month and core PPI month over month, were like one was expecting 0.1, it was 0.2, the other was 0.3 expecting 0.2. So not a perfect report, a little hotter. I guess we ticked down a little bit off that, like barely though, and that's ticking down in a gap up that's showing follow through from that intraday rally yesterday. Open, sold a little, and then just a really, really slow day where, so now we're coming into the Fed, which we have next week. And after yesterday's intraday reversal and strong close, negating Friday's candle, not quite negating last week. Actually, CPI day did not, it got close, but didn't break last week's low. So we're technically having an inside week right now, but super strong inside week, right? So coming into the Fed next week, it seems as though now we have fully priced in 25, but the market doesn't care. Is the market wrong right now and it needs to, correct itself in that way? Maybe, but for the time being, that's not what the market's giving us, right? So we have the Fed next Wednesday. I don't think there's too much in front of it at this point. It was CPI and PPI we had the jobs last week, inflation numbers this week. Next week, this retail sales on Tuesday. That's pretty much it though. So pretty much besides retail sales, we're done with data. We have all the data that the Fed's going to have coming into this meeting. The market is pricing in 25. It's not like we're pricing in 50 and there's downside risk of a 25 cut. We're pricing in 25. So the market knows that. Everyone knows that. And the market's very strong heading into that as of yesterday. Again, yesterday was so coming into this morning too. Once you get that powerful of a reversal, you get, SPY had to get through 550 for bulls at least to try to regain some control. We got through 550, 555, closed up there. There's no way, and it's not impossible, this market can do anything. I'm sure when we were at 540 at lows yesterday, we're saying to ourselves, there's no way that SPY is going to trade at 555 today. And as we know, this market can do anything these days. But coming into this morning after yesterday, we were kind of saying there's no way that we should reverse yesterday. Therefore, SPY, I think we said 550, definitely shouldn't be lost, but really even 552. If the bulls really want to stay good looking and yesterday wasn't just a fluke, we shouldn't lose 552 today. So we held upper 552s, bullishly digested the first half of the day, and the VIX kind of just bled out, and we had a little bit of an afternoon grind up from 12 to 2 and then continued to chop sideways from 2 to the close. And overall, pretty bullish day after yesterday was an insane bullish reversal for sure. So again, going forward, not too much into the Fed next week. Some University of Michigan numbers tomorrow. There's like one Empire State Manufacturing Monday, retail sales Tuesday. Those aren't always too market moving. And then the Fed on Wednesday, where we are fully expected to price 25. So I don't know, maybe there's a risk I guess there's a downside risk that we don't cut, right? So I feel like we are. It seems like we're gonna cut, but I guess that is the theoretical tail risk. But 25 cut, that's fully priced in. Everyone knows that. The market knows that. The market's looking bullish into it. So things are looking good again after, I mean, just like that, literally a week ago, we're looking like this could be the start of some huge rollover. And now we're looking pretty bullish with all time highs in the eyes, right? Um, 3-ish days until the Fed. Do we really have the power to get to all time highs and trade all time highs in front of that Fed? Probably not. And if we do, I would say there's more downside risk coming into the Fed just because we might have run too far too fast before it. But other than that, it's a pretty interesting setup with, again, it's partially the factor of how bullish we are, and it's also the factor that 25 is priced in, and that seemed like a problem a week ago, and now it doesn't seem like a problem anymore. But that's, I mean, markets change fast. It's just kind of what happens. You got to go with the flow. So yeah, so we'll see if we just kind of, we're back at this like 2 week range area, 5.54 to 5.64. So I can see us just kind of getting stuck in this price congestion area in front of the Fed, which will make for a not too exciting start to the week next week. But then this is like a super anticipated Fed meeting, right? First potential cut. Been looking for this for kind of years, low key. It's been like a long time. So yeah, we'll see with that. And I think that's all I really got. Just pretty much the week's action took place yesterday, and now everything in front of the Fed, CPI, jobs numbers, that's all out of the way now. And now it's really just all eyes on the FOMC. IWM looking and neutral right in the middle there. Q's definitely looking better. SPY obviously looks good. The Dow's been the strongest one. Dow's looking good too. So yeah, I think that's all I really got for today. Crazy day yesterday, slower digestion day today, and we'll see what happens with this cut. But again, it's interesting that we're so bullish into this, where it really seemed to me like a week ago we wanted 50 and it didn't seem like we were getting 50 and the market didn't like that, and now the market, I don't know, maybe we've just accepted that fact. So yeah, I think that's all I really got. Happy to answer any questions or anything. Obviously kind of choppy day today. I took a few random things and made a little loss, a little nothing impressive. Yesterday was the better day for sure. Both for the longs and the shorts yesterday, actually. Let me just pull up YouTube here. All right, I see Rex with a short little question. Let's see what you got, Rex. Hey, Pats. So you bought some stuff with UVixie on the pop to 26. Well, obviously, don't just say like, "Oh, we've been V-bottoming every day, so that's what the market does. It V-bottoms every day." Obviously, that's not necessarily always true. So what, you bought Tesla and Roblox at 950, and then Roku a little later. Okay, I see what you mean. Here, I'll switch. Looking at these other charts here, we'll switch this to a 5-minute chart. What is this? Tesla, Roblox. So what you're saying with Tesla? Well, okay. So hang on. First of all, Tesla 950. So maybe you're buying off of this candle, and then Roku at 1035. Yeah, I mean, so first of all, bigger picture, Captain Hindsight here. In the morning, we were saying that we think the market should hold up and not fail yesterday and trade lower in a big way. But we're kind of opening in a resistance area, and that might give us a little trouble at pushing up early, which I'm sure you were aware of that. So that being said, I like everything that you're doing. I like everything that you're doing, and sometimes these days this market just shakes things out, and that's okay. And something I kind of always talk about that Derek doesn't talk about as much, but it's because I don't know, people trade differently. This is the way I trade. I've been working on it for a while. It's been helping me. Is the just kind of like rebuying stuff, and you never want to fight things. Don't if your level's 230 and you get stopped out at 230, don't then rebuy it at 229, get stopped out at 228, and so on and so forth, stuff like that. But say, usually for the most part, even my like intraday trades, unless it's pure extension, and even when it's pure extension, honestly, I'm usually still getting daily levels. I really like pretty much all my trades to be somewhat based off a daily level. So say Tesla 228 is your level. Maybe you're thinking that here. Maybe you're just liking the candle. Ideally, you're thinking of the level as well. Because it just helps simplify things, in my opinion. So say like, you like Tesla through 228, which we might have mentioned this morning. It might have been lower than that. I forget. But say like 228 is your level. Tesla goes up. You miss 228. You see a pivot off 228. You buy it. And you get stopped out here when it's under 228. And then it's kind of like chopping here. Maybe you try it back through 228. Maybe this pays you and you get stopped out again. And then, it goes under 228 and then back over and you try it again. And I'm not saying to like retry it every time it goes back and forth through a level, but one, know your game plan and your risk reward. And part of that, we always emphasize the downside and the risk and you're out, because it's very important to know that, obviously. But it's really important to like, we just hammer that so much on like newer traders because people don't manage their risk properly, and they either take too big of losses or what they're doing is too random, and you got to have some math behind your numbers. It can't just be totally random. But as people start to grow, it's also really important to know your targets and what you think the name can do. And then that's, you got to have risk reward profiles. Knowing the risk is important, but if you don't know the reward either, how can you manage and or measure your risk reward? So going off of that, say you're buying, hang on, let me turn my squawk thing off real quick. There you go. So say you're going off of that, Tesla 228's your level, which looks valid, and you should be saying to yourself, I mean, this would be like kind of a day three, might not be the best setup, but Tesla is a momentum name, and yesterday it was a strong reversal back up, so you're thinking, I think we're gonna squeeze more today, and Tesla's a momentum name higher, and if it gets through 228, this could go to 232, and if it gets through 232, then maybe 240, and so on and so forth. That's great risk reward, or that's great reward, is what I should say. So say you're saying that to yourself, and then you're looking for setups off that level where If it gets through 230, if it gets through 228, it could go to 232 and then 240 and so on and so forth. If it's under 228, don't fight it. Um, and maybe you're buying with, I don't know, what's this low, 50 cents risk. It pops you, and how you take off your risk reward, it's a little different for everyone. I think it's good for the newer guys to do the one-to-one stuff, because you're probably going to be wrong more than you're right, and you want to not take too many losses. I think most at this point, I don't do that anymore. I will sometimes take like 25% on one-to-one. Honestly, sometimes I take 25% off at 1-2, and I don't even take anything off at 1-1, because you're capping your reward when you do that theoretically, and I'm totally fine with if you're fine with the risk, then you should be fine with the risk. If you're fine with the risk and then you get stopped out and you lose your risk and you're super mad and you lost too much, then you're not fine with the risk. That's just the truth. So risk less, do the same thing, just risk less. Take 400 shares instead of 1,000 shares. And it's better to be more consistent with better, like, what's the word I'm looking for? Like psychology, I guess, like a better mindset. Because if every trade just like a hero or like a total, like you're getting super mad and it's just all back and forth, you're gonna burn yourself out and you're gonna do stupid things eventually. It's got to be like emotion. We're humans, but you gotta trade like a robot, because we're in a robot environment at this point. So not to rant too much. I'm just like kind of speaking out loud here. But so, you're buying Tesla here, 50 cents. Maybe you're selling some $1 up. You get stopped out, break even, make a little, whatever. Then you maybe try, you're seeing it fail 228. So you're saying, all right, this is failing 228. It should trade back into yesterday's range. And but you're still watching it. It's not failing back in yesterday's range. Okay, maybe this still has a chance and it just needs more time. Breaks back up. You buy it back. Maybe you get some off here and then you get stopped out for small loss or something like that. Whatever. Okay, now it's failing back through 228 again. Now it should definitely continue lower, right? That's another theory I've talked about a lot with stop losses. Theoretically, when you get stopped out of something, you should be flipping it, because if you're stopping it, it means it's going to continue in the other direction. Otherwise, why stop it? Why not buy more, right? I'm not saying to do that. I'm just talking in theory here. So this goes back on your level. It should continue lower. It should break down. Definitely at this point, it doesn't. Once, maybe, and this is just, it's choppy market. This happens sometimes. But eventually, if this is going to work, and it doesn't work on every trade, and sometimes it takes multiple tries, but it only takes that one where you get that 10x plus. And if you're risking 50 cents, if you risk 50 cents and you make $10 on a name, which is very doable, especially in like a Tesla, it's not going to happen every time, but that's like very doable in a Tesla or in a Nvidia or something. You're making 20x risk reward on that. That's what pays you, not so much like the 1-1, 1-2 stuff. So, yeah, and then, this eventually like chops you around and maybe doesn't really give you much. It closes above your 228, so maybe you're still in it, maybe you're not, because you don't want to take the overnight risk. But the point I'm trying to make is, don't always necessarily give up just because you're getting stopped out of something. If you have a good idea, then don't throw it in the garbage so fast. I'm not saying you're doing that, but I feel like sometimes people do that. They have an idea and they get poked out by a couple pennies and then they just stop watching it. If it's a good idea, then, just try and stick with it a little bit. It's just an imperfect market. Markets are choppy and volatile. It's just not always gonna, sometimes it works right away and sometimes it takes like 5 tries. Trust me, I do it all the time. But if your risk reward is right, that you could take 5 losses and that, 4 or 5 losses, whatever, more, And the time it does work, you still end up making money. And part of that comes a little bit from not taking everything off at like one-to-one risk reward and stuff like that. So I went through this year with Tesla a bit. I don't want to spend a ton of time on the others, but my point is, if you are thinking you're too early and you're getting stopped out or like if you're getting shaken out, that's not the worst problem to have, because it means you have good ideas. You just got to trade it a little bit differently. Maybe that's more aggressively, maybe, yeah, and by more aggressively I mean being willing to try it more than once, or maybe just less size and more risk. But getting shaken out is a better problem to have than just everything I touch, it's like the top or the bottom and it just goes the opposite way. That's a different problem to have. If you're having that problem, you might not be looking at things right, and we can help with that too. But yeah, so rants over. That's not a rant to encourage you to fight things. But if you have an idea, and usually our ideas, pretty much all of our ideas that we come up with in the morning, at least that's what I'm trying to do and Derek's trying to do, are kind of not bigger picture, but they're they're based off bigger picture levels with news. It's not just, oh, this 5-minute chart at 3 p.m. yesterday looked good, so maybe this 5-minute chart continues. Like, they should be good ideas, and a lot of you guys have good ideas too. But it's just an imperfect market. It's not always going to work exactly the way you want it to. But again, you're risking 50 cents in Tesla, you're risking $1 in Tesla, and you get shaken out a couple times, but then the third, fourth, fifth try finally works, and it actually in a week from now is at 240, and you still have some, you're gonna make money on that. And again, not trying to get you to fight things, but I've been working obviously on trading for a while. I'm still teaching myself trading here and trying to be the best trader I could possibly be. And I found that this is really one of the only ways to capture. It's a little bit different when the market's like oversold and it really extended to the downside. But it's one of the only ways really to capture big moves with some size on these bigger, more expensive names with defined risk, where like maybe you're willing to risk 100 on a trade or a try, but you're willing to risk 500 on an idea, something like that. So if you get like stopped one time, you can't just try it again. And that happens all the time, right? You get stopped out in the morning, and then later on in the afternoon, it bases out and goes through, and you're not in it. That happens all the time. Happens to me all the time still. But you gotta have your risk defined, and you gotta have your reward defined, and your reward has to be better than your risk. And then you want some probability on your side, whether it's technicals or news or ideally both, so on and so forth. And yeah, that's like the only way I kind of really feel like where you can capture these big moves and these big names, that I've found that is stress free. It's obviously annoying to get stopped and retry and stopped and retry, and on the fourth time it finally works. I did that in like Nvidia's short yesterday. I took like a couple tries to get in on that move. I was risking probably 40-50 cents each time, and the time it finally worked, I held it from 112 to 108, so I was risking like 40 cents, made $4. Not trying to brag, just thinking of a recent example for myself where it's something, again, I've been working on for a bit. Because the other way is you take a ton of size and you have one try and it doesn't work, and that's it. And then if it works, you miss it. But you don't want to miss things. We're traders. Our job is to be involved and make money. Or you have, you start to play this game where you give it too much room. That's my doorbell. I don't think I need to get that though. you start to play this game where you give it too much room, and when you give it too much room, you can't get good enough size to get paid on an up move. Or you have size and like you play this build in game, and that's fine to build into things, but if you're building into things, usually you're not getting the size you want, and if you are getting the size you want, it's because it's going against you, which isn't necessarily great either. So I don't think it's a problem to stop out and retry if you see something where it looks like you're getting shaken out. Um, and I feel like when you're doing this long enough, not a super long time, but I don't know, a couple of years or something at least. I feel like you can tell sometimes. At least I can now, and I try to use that to my advantage. Like I'll get stopped out, and I'll see something go back above the level, and I'm like, man, like I got stopped. Like this is gonna work now. You can just like tell sometimes when you got shaken out, and then yeah, sometimes it's worth it to buy back in. So yeah, rant over there, but I feel yeah, that's like the only way really to capture something and not avoid getting shaken out, because you can't avoid it, but to still be in it when the move happens. Um, Tesla is gonna fluctuate $1 all the time, but once it finally does move like $3-4 in your favor, it's probably not gonna come back and stop you out. And even if it does come back and stop you out at that point, you'll make money no matter what anyway. So yeah, I hope that helps Rex as well as anyone else. Yeah, you gotta have your stops. You gotta measure your risk. You gotta have good risk reward. You gotta know your targets. But yeah, it can't be random, and you can't be taking size without having a stop. But if you don't have enough size on either, you're not really gonna make enough money. You can't just like lose 100, make 100, lose 100, make 100. You're not gonna come out on top at the end of the month. So yeah, hope that helps, Rex, and makes sense. Let me know if you have any follow-up questions on that. It's kind of a little rant, but just like speaking out loud about how I am trading and how I've been developing my trading for the better. It's been working for me. So sounds like a silly question, but how do you define reward? Yeah, the next. Yeah, targets, profits, targets, level targets. It depends what the trade is. Depends what you're looking at. If it's a daily breakout. Yeah, it depends what the trade is, right? If it's like a 5-minute, 15-minute extension trade, then your target's probably, halfway up to the 5-minute ADMA, and then up to the 5-minute ADMA, and then maybe one reach target at the 15, something like that. And you're $2 extended, so you're trying to risk like 50 cents, 25 cents to make a buck, $2 or something. That's a little different though, because extension on intraday always corrects when it's a small enough time frame. As in terms of like swings though, which usually you're trying to enter, sometimes you're entering day trades that turn into swings. Sometimes you're entering swings and you're just trying to do it strategically on an intraday chart to get a little bit extra size. But yeah, levels, overhead targets, and as the trade starts to work for you and you start to trail your stop, then you can play with the game plan a little bit. But definitely not a silly question. But yeah, something on the chart. It helps keep things simple. It defines it. You got to be able to define it. If you don't, knowing your risk and knowing your out is important. But if you've done all this work and figured out your risk is $1, and then your actual reward is 80 cents to $1, well, that's not really a good trade unless it's like 100% probability or something. So yeah, levels from the charts, depending on what type of trade you're in. If it's just a quick intraday scalp, that's different than something where you think could end up working for a couple days or weeks or so on and so forth. But Yeah, it's always levels and moving averages and stuff like that. Jim says he finds it helps sometimes to add where you think you're getting shaken out. Yeah, sometimes even placing limit order where you would put your stop. Yeah, obviously be a little careful playing around with that area too much, but I know what you mean for sure. Yeah, it's more just, it's a lot of if then this should happen statements. If this, I'm looking for a breakout, if this breaks out through this level, then this should get momentum higher right away. That's a momentum trade. Downside extension. If this gets extended enough down to this area, which is this far away, then it should bounce. I'm long this against this level. If it gets down through this level, it should flush out and continue lower. If you kind of know what you're doing, usually you're right. And if that happens, and not to say you're not right, but like if you're, that goes back to the stop out, shake out thing. If this breaks down through this level, this should continue lower. That's why I'm stopping myself out. Breaks down through the level, doesn't continue lower like it should. That tells you that there's actually some buyers there, and that's not a point where the buyers are giving up. And then you say, oh, this should have continued lower, but it didn't. I'm going to stick around and watch it a bit. And it either, half the time it's either going to break back up and it'll be a shakeout, and maybe you can buy back in and cover your risk again. And then maybe you get stopped out again and no harm, no foul. Or maybe it actually works and you did get shaken out, but you were attentive enough to get back in and still not miss the move. Or you watch it consolidate and eventually then it does continue lower, and you shook out, or not shook out, you stopped at the right point. So yeah. I thought I saw a question on YouTube, over on YouTube. Sorry if the audio is low on YouTube. Maybe, I don't know what I can do to fix that. I guess I could contact the tech team. But apologies for that. Hey Pat, do you know if Beto has decay? Yes, pretty sure it does. Built into it, some sort of friction. Beto definitely has some sort of decay. I'm like 99% sure about that. I haven't actually read the prospectus or anything. I'm like pretty sure it does though have some sort of small time decay. I'm not exactly. I don't know the specifics. So maybe like a quick Google search for that prospectus might help, or just searching for it. And I don't know if they're all different. Like if IBIT isn't as bad as Beto. I know Beto has the highest costs, or some of the highest costs, and that's why it's really come out of favor with these others. IBIT seems to be the most favorite now. Beto did 6.1 million shares today. This IBIT did 15.7. But yeah, Beto, I'm pretty sure has some decay working against you. Don't quote me on that, but pretty sure it does. Uvixi Bull, which also Uvixi also has some decay working against you, but I assume you know that. Alright, looks like I got through everything. I heard the NAV is recalculated, but yeah, I mean, I don't know enough to speak on it, really, to be honest with you. You're likely right. But yeah, I'm not, I don't know enough about it really. There's definitely some sort of decay for you there though. Cool. Well, looks like I got through everything. A nice little rant on trading there. You know, markets are choppy and volatile sometimes. Sometimes you get shaken out, but again, just keep it simple with the levels. If something shakes you out and then goes back up, if it's above the level, good. If it's below the level, bad. If it goes below the level and then back up over the level, well, it went from good to bad, back to good. So if you can sneak back in, That's not always a bad thing. But know your targets, know the environment you're in. If you're, don't be doing that on a day where you're not expecting things to continue higher and it's like a rest consolidation rangy day, then you're going to chop yourself up. But so yeah, know the environment you're in, stuff like that is super important. So yeah, I think that's it. We got a little bit of a slower couple days ahead of us, but it's been a pretty bullish reversal after yesterday. So we'll see if we continue higher back up to the top of this range, or maybe we make new all-time highs before the Fed. I think most likely, though, we do get a bit stuck around this 560 with that price congestion from a couple weeks ago. And all eyes on the Fed next Wednesday. So, yeah, Friday tomorrow. Have a good night, everybody. See you all tomorrow morning.